Gold's time has finally come, or so I thought last Thursday. As news broke of guns firing and missiles striking, gold rocketed, and we gold bulls had been waiting a long time for our day in the sun. Years of playing second fiddle to Bitcoin, stock markets, bonds and energy, and now suddenly gold was shining. In less than 24 hours, gold rose as near as damn it by $100 from around 1880 to 1975 an ounce. And in doing so, it broke out above 1920, which is the old 2011 high that held for so long, 10 years, 9 years maybe, is one of the pivotal price points of resistance that stood out like a sore thumb. Silver looked even stronger, going from $24 to $25.60 per ounce in the same time frame. There was a lot of crowing on social media, always a bad sign. And then something extraordinary happened, the likes of which I don't think I've ever seen. I remember reading an article once by a veteran mining trader, once upon a time, in which he recommended, as part of his trading strategy in bull markets, to always listen to that little voice in the back of your head on the rare occasions that it piped up. Well, late yesterday, a little voice was definitely chirping, and it wasn't just gold and silver that had spiked, of course. Oil had gone up above $100, grains had gone limit up, platinum and palladium had gone nuts, the Dow Jones and the S&P 500 were capitulating, and I mean capitulating. America isn't going to allow this to happen, said the little voice. It's going to call in the plunge protection team. Now, call me a conspiracist, but such a team does exist. And I guess it began with the panic of 1907, then the worst stock market crash that America had ever seen, when financier JP Morgan famously coordinated the major banks and the wealthiest individuals over a grueling week to provide the liquidity required to shore up the capitulating system. He was then seen ostensibly, visibly, ostentatiously walking about the floor of the stock market loudly and visibly buying shares, deeming these great companies bargains. And something similar happened, I believe, in 1929. Now, over the course of the last century or so, Morgan's effort has gradually been formalised. And in 1988, after the crash of 87, President Ronald Reagan signed Executive Order 12631, 12631, which established the President's Working Group on Financial Markets, aka the PPT, the Plunge Protection Team. Now, there's only so much that the Plunge Protection Team can do, of course. 2008 showed that. But it is at such times as yesterday that its services are required. I say yesterday, I mean Thursday. It was one heck of a turnaround. The Nasdaq went from 3% under to 3% positive for the day. The Dow and the S&P rallied, commodities pulled back, and precious metals took one of the biggest daily beatings I think I've ever seen. Gold fell $100 in 9 hours. Silver, which had been at $25.60, went to $23.80. Now, you'd think on the day that the threat of World War III was perceived to have drawn a great deal closer, let's say, gold stocks would rally. Nope, they fell. Now, why bother with gold when Russia invades Ukraine and the divided politics of the United States suddenly unites as lawmakers from across party lines sign a letter asking President Biden to seek Congress approval to send troops to the Ukraine, meaning a direct confrontation between soldiers from Russia and the US. And gold still can't rally. What's the point? I tell you, investing in gold is like being stuck in a toxic relationship you cannot get out of. Now, I tend to advise tuning out of the news where possible. Whatever intellectual process you use to make investment decisions, be it fundamental or technical analysis, is fine, but don't let the news be your main decision maker. Unless you have some extraordinary source of early information, that is. Such things are hard to come by unless you're on Twitter 24/7, at which point you will drive yourself nuts. The problem with news-driven decisions is that there is always somebody who is getting the news before you. That said, you cannot help thinking that these are news-driven markets for the foreseeable future. First, the question was, how serious is Russia? We have the answer to that. Pretty serious. Now we're asking, how long is the conflict going to go on for? A few days or longer? How embroiled is the West going to get? Sanctions, it seems, are not going to be enough. And with each development, markets are going to swing wildly. But the bottom line is, for gold at least, plunge protection team or not, gold, it's got to go higher. On the daily chart, even with yesterday's action, the short, the medium and the long-term averages are sloping up and they're in golden alignment. The trend is up. On a weekly chart, the averages are also in golden alignment. They've coiled, they've converged, they're starting to slope up, and gold is starting to break out. Starting, I say that, it's having a bad Friday. On the monthly chart, we have the most beautiful of cup and handle setups formed over 11 years. You can see it on the chart here, and the cup and handle is widely agreed to be a very, very bullish price pattern. Don't expect to be treated well. Gold will batter you, bruise you, lie to you, and lead you up the golden path. You really don't deserve such treatment. 1920 is probably going to remain a problem, as will the old 2020 highs at 2100. March is usually a crappy month for gold. The way it's broken up and then suddenly breaking back down again, it makes me think from false moves come fast moves in the opposite direction. That concerns me. All of that, I still think it goes higher and that the other precious metals will follow. I hope I'm right, you never know, and if one thing the markets have taught me, it is humility. Thanks very much for watching. Please subscribe to the channel and please subscribe to my Substack channel. I'll post links on the screen. This Substack is pretty good and there's a paid newsletter that I'm really excited about, as well as all the free stuff. And I'll be back with another video very soon. Until then, cheerio.